Hello, hello, hello. Guess I'm back to being broken. Hold on, let me fix me. There we go. Hello, everybody. How are you doing? How's everybody doing? Hello, Wavy. Hello, William. William asks, SPY near all-time high when my entire watch list is red. How? Well, it depends what's on your watch list, William. I mean, you know, it's not necessarily. Here. Let me put up a heat map. Here's a heat map for you. So you can see here. I mean, if your watch list was filled with, I don't know, a lot of semiconductors, it probably was a bit red. What else do we have? What else do we have here? I mean, Amazon, Facebook, red, Nvidia. I don't know what's in your watch list. But there's a lot going, just not your high fly names, although HD's been on a tear more often than not recently. Home Depot's and Lowe's up. You had like J&J. Again, we talked about healthcare yesterday. CVS, Anthem, UNH. Uh, there's a lot of stuff that was still up. Nike, pretty decent. Costco, Target. So a lot of the bigger names might have been down, like Walmart was down a little, but Apple was pretty much neutral. Microsoft was up a hair. Uh, so I don't know. I mean, if you had a lot of energy stocks in your watch list, it could be red, but it just depends. It wasn't your big names lifting it up today. Your Microsoft, your Apple, your Google, your Facebook, your Amazon, your Tesla. None of those were doing the heavy lifting today. No, it wasn't the best day for tech, but we're here to trade, and not every day's got to be a great day. Santa rally over. I mean, I love this setup that's in the S&P right now. I love this setup for a breakout to the upside. So I'm still favoring upside price action. But by the way, before we get into that, if you are new here, please do consider subscribing, ringing the bell, and hitting the like button. Now we can shift cameras and get into the price action. Here's the SPY. Why I love this kind of price action. Let me remember we talk about stuff. There are two ways to correct. I mean, this wasn't quite yet overbought, but we did have a massive 4-day rally. And now we're having a 2-day pause. Remember, I talked yesterday. As long as we're remaining above this 12.5% pullback level on a closing basis, this is just moving sideways and letting things like the 4-hour rotation zone catch up. So, this is the way you burn off. And I like things that base right near the highs. And this is basing, we're at all-time highs, and it's basing sideways. It's not pulling back drastically. Now, one thing I talk about is multiple bottoms in the same area. By the way, this is not a double bottom. These are two bottoms. And I also talk about focusing on candle bodies more than just the wicks. However, this is a time where I will be watching the areas of these two bottoms. Why will I be watching that? Because if we break down below that, that's going to be on my line in the sand, and then I will start watching for a bigger pullback. And if we broke down especially tomorrow, then I'd say yes, the Santa rally was over, and we'd start watching what happens next week at the beginning of trading next week. But as long as it's basing sideways, it's in a great shape for me. I like those setups. I got to bump up my bullish line in the sand for tomorrow about 47.89. It's got to get above there. It's not been able to sustain. These are the kind of days I talked about just like yesterday. This choppy, all over the place days. And this happens a lot of time at the end of the year specifically. There's a lot of rebalancing. There's a lot of tax loss selling. There's a lot of year-end movements. It's thinner markets. You don't have a lot of the big players running a lot of the major algos just because it's thinner markets. So you can get this kind of whipsaw back and forth like this off the open, running up, running down. And these are the kind of days that if you don't have a reliable pattern or anything to do, just sit on your hands and manage your longer term positions. And what you said, volume is a lot lighter too, and moves can get whipped around because, again, You don't have a lot of, and they do close down some of their high running algos because the volume is lighter and things can really get out of control if in lighter volume conditions. A lot of people take this week off. I mean, they may make some adjustments, or they may have the firms might have some junior traders are left with, okay, we're going to rebalance this, we're doing this, we're doing this. All your goal is to execute, especially around the VWAP. Other than that, or let's get into this, let's do some window dressing, end of year, end of quarter, end of year, let's do this, but let's not make any huge, massive moves. I mean, that's what generally starts happening next week. So can we see a sell? You can always see a sell off. Right now, it still favors. How do I run things? Let's see. Let's just go through my little line in the sand. All right, we're up at highs. We have the daily rotation zone is in bullish mode. The weekly rotation zone is in bullish mode. The 4-hour rotation zone is in bullish mode. Until that changes, I got to stay in bullish mode. And right now, as I said before, we're basing at the top. Instead of already doing a pullback, we're basing at the top. Okay, we've nearly got overbought conditions. Where were we on the weekly? You know, it is running out of a bit of steam, so I would not be surprised to see a sell-off coming up sometime in the new year. But we're going to get some warning signs first. The first warning sign is a break. We nearly had an inside day today. But so what was the low yesterday? 47.70.50. Today was 47.70. You know, you start breaking down below 47.70 with momentum, I will be watching for the pullback and I'll manage things accordingly. Until that happens, no, I'm not. I'm going to go with the trend. And then a pullback, it could easily still come back down. Look at the daily rotation zone coming in at the 25% harmonic. Even if you're basing, even on a pullback back to a 25% harmonic after this kind of run up is still very, very bullish. And it would be retesting the prior resistance area, becoming support. Okay, so what I'd start watching for is if we break below the 47.70 area, hey, let's maybe, with some momentum, maybe we're going to target this 47.28 area, 47.22 to 47.28, and let's see what it does there. But if you're in a longer term position, let's say you're in a longer term position with the SPY, are you up here panicking? Oh, what if we pull back? No, your stop would have to be back below somewhere in here. It would actually, if you're at a long-term stop, it would be back below about 4,500. And a shorter-term stop, I wouldn't do anything unless it got back into this consolidation area with some momentum to the downside. Otherwise, it's just still a normal correction. This is the kind of correction I favor, this little sideways correction right at all-time highs. So if you get a little turn up, and I don't mean the turnip's a vegetable, right? I don't mean the vegetable. I mean a turn up. You get above, look at this key line, 47.95. You see this, all these candle bodies, and then it was retested today. You get a move above there. It's off to the races, you know, possibly the next 2 days. All right, so there's your question, Coco. Can we see? You could always see a sell-off, but there's nothing to indicate it yet. It's basing sideways, unless you have some magic indicator that's, hey, I don't have any pattern. I don't have any pattern that says there's going to sell off. I don't have any major topping pattern. I'm watching the weekly because we're running lower momentum as we're making new highs. The breadth of the market still stinks. So there are some warning signs for at some point a sell-off, but does it have to happen tomorrow? No. Does it have to happen Friday? No. It could. You're going to get some indication. So let's go over our levels. We start breaking below 47.70. Keep an eye still on the bottom of the 4-hour rotation zone coming in with the 12.5% harmonic, because it could still come down in this area and close up above there and rotate up. That's still considered a sideways little correction. So you're at about 47.58 to 47.63, but this will keep creeping up overnight. So keep an eye on this area. Then if we drop below there, That's when I start watching for this 47.28 to 47.22 area. That's all we really need to focus on, because if we start dropping below here also, we're into a clear path move. So keep that in mind. That's where we could see some downside momentum. Until that happens, nothing to do. Inverse head and shoulders on the daily. Inverse head and shoulders is a bottoming pattern. Okay. Head and shoulders is a topping pattern, which we don't have here. Inverse head and shoulders is a bottoming pattern. It has to reverse a move. So therefore, we cannot have an inverse head and shoulders. And there's not one here. I mean, it doesn't even look like anything to me. Unless you're trying to say this is the head, this is a shoulder, but that would be a horrible, even if this was reversing something, that would be a horrible, sloppy inverse head and shoulders. So no, it's not. A lot of people confuse technical analysis patterns and don't know when to apply them, and don't know things like head and shoulders are topping patterns, double tops are topping patterns, wedges are more like often than not reversal patterns. So that's the key thing. Let's see what else. So that's above there. Nothing's really changing with our level C upside from yesterday. 48.04 to 48.04 to 48.08, 48.19, 48.32 to 48.36. Yeah, I'm not picking on you, Wavy. I'm just saying people get confused, and there's so much crap out of there with misinformation of people that really don't know technical analysis. Or just spot a pattern, they think it means something. But it's not a pattern if it's not in the right location. So it's not real because it doesn't test out. And that's what's key. A lot of people have read stuff in a book that didn't know what to talk about, or seen stuff on a YouTube video or some other course and they didn't know what they're talking about, and they just say, oh, this is an inverse head and shoulders. It's a bullish pattern. But it wasn't really an inverse head and shoulders. It was just the move continued to the upside after what they thought was a bottoming pattern at the top of a move, which doesn't make any sense. So, I mean, I get frustrated with so much misinformation out there. The 1 hour time. Though this, you're talking about the S&P on a shorter time frame, like the hourly or in a bull flag, right? This is just a horizontal consolidation channel for me. I mean, we pretty much have the levels marked off here. Look at the 47.76, 47.95. Start to look at stuff with candle bodies, you'll spot it more clearly. See, if it was going to be a flag, it would be, let me take off this. A flag would be more like this kind of pattern. Let me move this out of the way. Okay? A flag would be more like this. If we had a pattern cascading down and then you break to the upside. That versus what we're in now, and the moment you start to see things with looking at the candle bodies, you see that? Yeah. And you see how this is a really nice resistance shelf based on candle bodies. This is a really nice support shelf. You see this? Stop it. Ignore the wicks. The best thing I can tell people, besides, there are some exceptions like this, two bottoms because of where it is, but it still lines up roughly with this nice candle body formation. You can start to see patterns a lot better. All right? That was definitely a horizontal, okay? Just because you don't have every wick or every candle body, start focusing on the bigger pattern, though. NASDAQ pulling back. So this is more of a pullback, but still above the 25% level. So this wouldn't be, this would be more, let's see what this looks like. This is more of what you were just talking about, Wavy. Let me put up. This is more of what you were talking about. And I'm still, you want, again, you want the little hints here. Look at, if we do this, that's more of your flag pattern right there. Okay, so that's more of your flag pattern. A lot of big put selling today on the cube. Thanks for that. I didn't look at the put or the options on the cubes. So thanks for that information, Sterling. I mean, these are still both bullish. So we have the S&P basing at the top in a horizontal channel above the 12.5. You have this still with this would be a bullish flag pattern. You see this? Basing near all-time highs. So again, we're focusing on the candle bodies first and foremost. Yes, I know the high was up here, but we're focusing on the candle bodies first and foremost. And it's basing right there with a nice little pullback and still is not closed below the 4-hour rotation zone. So you can start watching for a break upwards. Now, what starts to invalidate that? You start getting below in the Nasdaq, back below this about 16,365. I start watching for the bigger pullback. What would be my next level I'd be watching for? 16,303. And that's where the top of the rotation zone. If it dipped below that, 16,221, but I would watch where it closes in relation to 16,303, and the bottom of the daily rotation zone is 16,182, and we have a cluster there. So we have a prior harmonic from this bigger set of harmonics in orange or yellow, whatever you want to call that color, and this other significant level, 16,182 at the bottom of the rotation zone. So, but you start breaking back below here and the 12.5, I mean the 25%, see how that's roughly at the top of this prior resistance area coming in here that it got rejected to from multiple times. You start breaking below that, it's not as positive for the NASDAQ. To the upside, again, nothing has changed. Let's just see here. That was the bullish area from what, yesterday. Let's see, bullish for tomorrow. I need it to get above. I need to get it above about 16,558. You start getting above there. Again, you can start watching this overnight European session, but you start getting above 16,558. We get into this clear path move. Then I'm targeting up around 16,645 area. Get above 16,645, and look, we're coming back. This is easily an area we can rotate above. Then 16,667, then above there. I got the next cluster 16,805, then 16,927 to 16,951. So that's. Can NAS visit the 50 MA? It could. And look where the 50 MAs. But will it tomorrow? Unless something absolutely catastrophic came out, I'm not seeing that because, again, we don't have a major topping pattern yet. And it would have to work through all this area of significance. Now, if we start to get downside momentum and some earth-shattering news broke, yeah, we're in a daily clear path move right here. But you got to get through the rotation zone, which lines up at the 16,303. You got to get through the bottom of the rotation zone and cluster. Then you got to get through the 50% run-up, which is a pretty significant level from this run-up. Then you got to get back down to 15,978, so roughly 16,000 with the 50. we will get, oh, if it starts breaking down, that would not be my first target. My first target, we already went over 16,303. My next target would be 16,182. I see it more clearly now. Thanks for clarifying that. Okay, was that in relation to the horizontal channel versus the flag pattern? Just trying to help. And again, let's take a look at the bigger picture in the, since everybody's worried, and yes, can we get a sell-off? Yes, it can happen at any time. But weekly, we're still in bullish mode with the rotation zone. Daily, we're still in bullish mode. 4 hour, we're still in bullish mode. 1 hour's just gone flat. And I mean, it's pretty much flat and choppy in a flag pattern. So you still have everything favoring a potential bullish move to the upside. So from my perspective, again, we don't predict, we wait for patterns. And you start getting patterns that show up a lot of times before. Like, all right, even if we pulled back in the, as I said, even in the S&P, if we pulled back a bit more, doesn't mean you're still out of the bullish pattern. It just means you got a bigger pullback. The Dow, not flinching yet. They're, again, this is what's interesting to me is we're still rotating into more stalwart names. So the Dow's been pushing higher, but now we're just getting some divergences, at least on the 4 hour. So we could be getting a little toppy. So this is where, but just because we're getting toppy, remember, we could pull back, push up again, get another divergence, push up again, get another divergence, and then roll over. So for the Dow has to remain about above for me to be in bullish mode tomorrow, about 36,366. The Dow's getting a little messy, starting to get some selling at the end of the day. But again, still your 12.5 level right here. You have these two lows again. That makes it a little sloppy, but we can take a look here. We do not have a double top there, so we can't rely on a double. So I'd just be watching these two lows, 36,252. You start getting some momentum below there. I'd start watching the bottom of the daily rotation zone, currently about 36,130. That's going to rise. You also, though, have some support. So I'm going to draw a couple lines here. Put my little Dow thing. I want text. I want this. Here we go. All right, so you see here, this is a sort of a wider support zone. Why I'm having two lines? Because it is, if this keeps rising up closer to that, the 36,186, that will be the level I'm focusing on. If we just turn and drop, and we drop below those two key lows, then I'm watching about 36,132. But that's my support zone, even if we pull back. And then we have below there, right at the 25%, this prior resistance area becoming support, and right above there at 25%, 35,984 area to about 35,933. Even on a pullback, that would just be a pullback to prior resistance becoming support in the rising rotation zone. Where I'd start getting concerned with the Dow is if we start getting back around 35,510. About the 50%, because that would mean this level didn't hold, your rotation zone didn't hold, and we're back at the 50% area. So and again, after eking out new highs, you see here, new highs, there's no divergence there on the daily, but there is on potential on the weekly, unless this really gets a strong move on. There's potential divergence up here. So again, but that's on a weekly time frame. So it's a warning sign. Now I take those divergences in conjunction with the fact that The breath still stinks, and that's why we'll be watching for early signs, especially next year, of a potential market top and a bigger correction. Let's see here. We don't really have to update any levels to the upside. If we break above today's highs, you're watching 36,489, 36,570, 36,641. Above there, we're right around 36,760. Okay, let's see. All right, what do we have here? I'm going back to the comments. Then kind of been covering it, but SoFi has pretty much bounced upwards around the 1480. I don't know if we'll see much in the fort. Oh, let's see. Let's take a look at SoFi. I did not get the order. I do everything just for everybody to be aware of it. Uh, we do the S&P, NASDAQ, Dow, and then we get into, there's might be some other things I want to touch on, that, but then I generally get into stocks and other things that people want to look at. So if I'm still in the S&P, NASDAQ, or Dow, it means we haven't really got to stocks yet, because I like to get the big markets out of the way so we get the macro analysis in, so we can look at everything from that view. SoFi pretty much bounced upwards. Well, bounced up in the rotation zone. Again, could not get above this key area on a closing basis, and now rotating back down. It is losing momentum. So it could be in the process of putting in a bottoming pattern, but the longer it stays in here, it's a pretty decent, if we can stay in here and then get a turn up above 1550 with the daily rotation zone out of the way, then it could be at least for a potential run to 1630 area. Okay, but you gotta just respect the rotation zone. See, it has not been able to, since they crossed, couldn't even get into it here. Got into it here, rotated down, here, rotated down, got into it a bit more here, rotated down. It's weakening and it's starting to flatten out. But you really need to get a move with a close above that rotation zone. What else? Well, thank you, Lions. And it doesn't matter what I think. We got to trade what is. And predictions are what. Let's say I predicted that the Dow was gonna crash by 50%. What are you going to trade off that? If you're going to trade off a prediction from me, or let's say I'm going to say the Dow's going to double, are you going to trade off that? That's not tradable. We're here to analyze and trade. We're not here, and even investing is just trading on a longer term. So, like when we'll get at some point some bearish setups, we'll get some bearish price action, and depending on how that looks, we can start doing analysis and saying, okay, we could be in for uh, a bigger correction, and that's something that can be tradable because we can start identify key levels. We can start saying if it breaks below this, start moving up your stops, monitor your stocks closely, and know where your stop levels are. And we can go through stocks and find key levels and say, okay, if it closes below this level, you might want to be out of it. Until that happens, you got to keep going with what got you there. You trade with the trend until the trend ends. And are you trying to call tops or bottoms? No. Do not try to call tops or bottoms. You're there to take the chunks out of the middle and stick with the trend as long as the trend is your friend. Yep, jobless claims are tomorrow. Are they? Yes, they're not on Friday because of, I think, is that right? I'll have to double check on that. Yeah, I'm going to watch. January is going to be interesting. I am watching for either breadth has to improve and we have to work off these potential divergences, or we're going to get a bigger correction. Okay, but again, that's technically a prediction. You shouldn't trade off that. If the signs are setting up, so we'll start getting, if you're going to be here every day, because I'm going to keep doing this, as long as people are showing up, we'll start seeing signs. And then we'll say, okay, breadth is not improving. We're breaking key levels. What do we do now? Now we manage the trades. Square, of course, square. Square, you have a potential double bottom now. But you don't do anything. Even with this little hitch in there, it's still a valid potential double. And there is no, now a front run pattern would be, and this would be a super aggressive front run pattern, would be a close above today's high within the next 2 days. So that's super aggressive, but then your stop would have to be right below was 157.57 area. Again, this is for educational purposes only. I cannot give trading advice. And it's a very aggressive, even this double's aggressive because it's against the daily rotation zone. Why do I say that? Because what happens in a rotation zone? The probabilities are still it can rotate back down. Now, what's interesting about this is, let's say it came up here, triggered above this tomorrow. Well, then you'd have the buy pattern above today's high, but you'd also trigger a buy pattern on a double. But what's the first target? Right at the top of the daily rotation zone. So theoretically, this could come up, hit the target, first target, daily rotation zone, and then rotate back down. But the first target is for stop reduction. Why? Because if it hits there and rotates back down, you want to minimize your losses. So there is no, you need to wait for any price action to at least prove itself. The front run would be a close above today's high. The full double target would be a close above 171.84 to then trigger the double. And also you're against the weekly. And what's interesting on this is look at the target and look where the weekly rotation zone is. So theoretically, and this is why you treat doubles with the targets and you remove the position once the targets are hit. This could, let's say it came up here. Let's go through this. This is helpful to people because they start to. So let's say you came up here, it triggered the double. Comes up here, you reduce your stop. It rotates back down and your stop reduction would, it's still below this area. I have a set of rules for it, but I wouldn't be moving it above 168.50. So you could come back down here on a closing basis and then rotate back up, get through the daily rotation zone, and come up here, complete the pattern, and hit the weekly rotation zone and still rotate back down longer term. And the weekly rotation zone would still be intact. And it would just be a little short-term bottom. So, yeah, Micron, banner day in Micron. But look at these. Look at these. All right, remember when we talked about this before? Remember with earnings and it gapped up? Remember how we had these levels in place? Were you here there? Because we've had these levels. This is, you can go back. It was right around December 20th or the 19th. I don't remember when we put up these levels. I know I covered it in there and these levels have not changed, but look at this. 94.90. Boom, boom. Pulling back to the other harmonic with the 4-hour rotation zone. Rotating up. And this is the kind of thing now that you have this. When you had this, I didn't update this chart yet. I had it on my other trading platform. But this is where you take the levels, the most recent swing. So here's the most recent swing, and look at that. You can't make this stuff up. So you're trading horizontal. All right, you see this wavy? Yeah, wavy was here, but you see this? What's this? What is this, wavy? Here, what is this? Now that you should be able to spot this really well. Was that a flat? See, people would try to do this with it. Oh, look, it was. That's not. They'll try to say that's a flag pattern. It's not. Tell me which looks better, this blue thing or these two black lines. Which captured the price action better? I hope everybody's learning today. I'm sort of in a teaching mood. This captured the price action a lot better. It broke up from a horizontal channel. We used the harmonics, and we hit the daily major harmonics. Now, this also gave us a area to move up our longer-term harmonics. And look at this. Look at this. I just moved them up to this. Remember we talked about pausing bars? By the way, if anybody finds this helpful, you can always super chat. You can always Patreon. You can always buy me a cup of coffee. Anything you want to do to support the channel, because I think this information is pretty invaluable. But we just went up to this pausing area. We talked about pausing bars. If you want the discussion on pausing bars, tune into yesterday's live stream. So we did the most recent swing. You'll hear me talk about the two major swings to do is the longer term and the most recent. Most recent, 96.76. What was today's high? 96.75. I think that was pretty good. Then we have a cluster, 98.55, 98.60. Above there, 102.25. So you already have your upside targets in place. And you should be able to manage this also using the rotation zone. You start getting a close back below now this today's low with the bottom rotation zone, gap fill, and then you watch for this prior resistance becoming support with the bottom of the 4-hour rotation zone. That's how you can manage the position. Oh, I forgot to take off my little Dow thing. What kind of coffee? Buy Me a Coffee is a link to a site you support the channel with. It's in the description links. But but what kind of coffee do I like? I drink a lot of coffee, but I like I do a lot of espresso. But the real espresso connoisseur is Bob, my partner, Bob Ichino. He's the major. He can drink like 15 of them in a day. I can't do that. But I do like good coffee, separate from buying me a coffee. So the horizontal channel is capturing the range between two areas, yes. And you watch for a break. I watch for closes above close above or below. And I know we've tried. We ran into some technical difficulties, and he was traveling a bit, and we've been just super busy to align our schedules. And then he still does TV stuff, so it's just challenging. I'm going to get him on. I'll work on it in the new year, especially if we start getting market corrections, because he can talk about a lot of fundamentals. He monitors fundamentals a lot more than I do, and I'm the technical guy. I'm the technical analysis guy. So that was Micron. I'm not seeing anything. Oh, see, on days like this, if there's nothing to trade, you don't trade it in that market. You do go through scans in other markets. Why am I talking about that? This was the great trade. And this nice little double bottom in crude going into a clear path. And that was the great trade right here. It would have to be done very aggressively with this momentum bar because you didn't get a pullback. But now, especially when you're going in a clear path, does everything have to stop at the end of the targets? No, because you can always initiate a new trade with the rotation zone. But look at these targets. Look at the targets. Look at the pause there. At the second target, you see that nice little pause there? And look at the pause at the final target. And then it resumed the trend. That's why you use these targets. Just wanted to point that out. You find things to trade, and if there is nothing to trade, you sit on your hands. I'm still keeping an eye on the 62.5%. We talked about this a couple days ago. It still can't get a close above there. We might be in for a brief pause or at least a pullback. I'm watching a pullback to about 74.40 area. Oh no. Baba. You still have the double in play. But again, see, you still got that rotation zone in. Aggressive, now you have an aggressive buy above today's high, but that's super aggressive. You see how it's just drifting down, holding the rotation zone lower. Now, what's interesting on Bob is it can get back up to 129.45. You now have the daily rotation zone out of the way, and you have the weekly below it. So it could get a close into here and then run up to this pattern and still not be out of the way of the weekly rotation zone, and also run up to here, the prior support area becoming resistance. So there's your BAMA. All right. I'm not seeing anything else. So, oh, now I am. This is the last one. NIO. Let me clean up this from before that I never cleaned up. Haven't cleaned up this chart in a while. NIO has a potential double. Again, unless you have a strong bottoming pattern, do not front run. It would need to close above 31.32 with a target of 34.85. You see how this is the move that started it? Remember we talked about this? This is the move that started it, and all three targets are within the move. Yeah, it does look like trash. But if it triggered a potential double, that's a trade. And weekly. Now to the downside, because you got to analyze both sides. There's the potential double right there. To the downside, though, let's see where this takes us. If this does not hold, 27.50 area, your next support is coming in at the 62.5. Let me look at the bigger picture. Now I have the 62.5. We have this run up from all the way in the lows in October of 19 to the highs of 8th of January of last year. Or this year, it's not last year yet. And the 62.5, you know, I love that key level. And now you have a harmonic and you have this little base. You break below there, watch out below. That would not be good. Right now, the trend still favors down. So this, just because you have a potential double does not mean you do anything unless it triggers. Because now if it breaks below this 27.50, we're watching 25.43 to about 25.91. There is so little support. There's a little support right about this 25.91 area. See right here? And then the next major support area is down about 21. Okay, you might find some minor about 22, but 21 to 22 is your next support area, and you still have a gap here. So you start getting below this. It's an interesting short play. If you can start getting below this about the 26 level, there could be an interesting short play in there. All right, but that's the upside and the downside. And right now, it's what did you do your analysis? Where's the trend? Weekly rotation zone down, broke this key level support. But what's interesting is it could theoretically trigger this double, come back, visit this key level support, becoming resistance, then roll back over and really head down. So weekly's in bearish mode, daily's in bearish mode, 4 hours in bearish mode, running out of a little momentum here. So that's where you're not predicting. Yes, it could easily come down here. I would not be overly bullish, but again, it could be a short-term play. And if you didn't want to play it short-term on the bullish side, if this triggered, I'd watch for shorting opportunities up here at some of these key levels and roll over, because then you could reestablish a short position going lower. Yep, there's a lot of issues with Chinese stocks. I'm going to do Tesla at the Tesla live stream. So I'm calling it a day. It doesn't matter. We can analyze stocks, because even if you don't want to ever trade a stock, just going through the analysis can be very helpful. It's great to learn to analyze stocks. You could call out stocks all day long, and I could sit. It doesn't matter what exchange they're on. Doesn't matter what country they're in. I can analyze them just the same, because that's the key. And it's not getting married to a stock, it's learning how to analyze a stock. And it might be a stock I never trade, but it doesn't mean you can't analyze it and learn from it. All right, I will talk to everybody. You're welcome, Andre. And we'll see you guys in a bit. Everybody who joins the Tesla live stream, bye for now.